folks, Dan Frio here, the Mortgage Update. We're going to change everything to therateupdate.com, so that's coming soon. So today is April 29th, 2020. So I'm getting a lot of comments about, say, Dan, you're talking to us about streamlines, how to refinance an FHA or VA or even a USDA loan. But what can you do if you have a regular conventional loan? So that's what I want to talk about today. So I want to thank everybody out there for those questions. So, normally an FHA loan is easier to qualify with because the credit scores go down to a 580 credit score, and you can get a debt ratio of over 50%. But what I'm talking about today is basically how to qualify for a conventional loan, especially right now, and be able to skip 2 payments and how we do that. So let's go over the qualifications, and then we're also going to go over the benefits of how this is helping many clients that are calling in right now. So conventional financing, basically that's just a normal mortgage. If you don't know what you have, call me and I can help you figure out what you do have. If it's a conventional FHA, VA, or USDA loan. If it's VA or USDA loan, you probably know you have that, but you might not know if you have an FHA loan or a conventional loan. So, how do you refinance a conventional loan? Well, you need a 620 credit score or higher. So, you probably, if you've had a conventional loan, if you've been in it for the last year or two, you probably have a 620 credit score, but you cannot have missed a payment in the last 12 months. Very similar to the FHA and the VA programs that we have. All right, so conventional financing, you need a 620 credit score. Here's the great kicker on all this. You can refinance up to 97% what we call loan to value. So 97% of your home's value is what you can do on a refinance. That refinance, though, could only be what we call a rate and term. What a rate and term is basically we're refinancing your current rate or your current mortgage, and all we're tweaking in that whole process is we're changing the rate and or the term. So in most cases right now, what we're doing is we're taking people that have a higher interest rate. In this case, we're going to show down here in a second, a 4.5, say, and we're changing that rate to 3.25. And this is the difference of what that would be for a client that we're working on right now. They closed a $300,000 loan. They did it about a year, just a little over a year, about a year and a half ago. And we took them from 4.25 to 3.25. They went from $1,475 principal and interest to $1,262. And we're able to skip 2 mortgage payments right now. And that's helping out a lot of people. So you're able to refinance up to 97% of your home's value. All right. The next thing is if you want to pull out cash. So let's say you have some bills, you have a car payment, you have some student loan debt, or in the last month and a half, 2 months, you've racked up those credit card bills and you're like, Dan, I don't want to pay a credit card rate of 25%, so help me. So in that case, we can go 80% of your home's value, you can pull out cash to pay off, put cash in your pocket, pay off bills, do whatever you want to do. So let's recap this whole thing. On a conventional financing loan, you can qualify with a 620 credit score. You can go up to 97% on a refinance. The kicker there is, let me give you a little quote on this. The current loan has to be a Fannie Mae or Freddie Mac loan. You probably don't know if it is or not. Reach out to me. I'll do some research on your property and your loan and let you know probably within an hour if you have a Fannie Mae or Freddie Mac loan. Most likely you do. So that's the good part of that. If you're looking to cash out, pull out some money, put it in your pocket, put it in the bank, or pay off bills, you can go to 80%, what they call loan to value. You can go up to a 50%, what we call debt ratio. That's all of your expenses plus your proposed mortgage divided by your income. Okay? Here's a good thing that's happening right now. Probably, I want to say 60 to 65% of the loans that we're doing, we are getting what's called, we internally call it a PIW. So we run your loan through the system. We run it through Fannie Mae or Freddie Mac. It says, you know what, congratulations, your loan is approved and you got a PIW. What that is it a property inspection Waiver. You do not need an appraisal. Wiped out, clean, whatever value I put in the computer system, that's what it's approved at, and we do not need an appraisal. So again, 620 credit score, up to 97% of the home's value to rate and term, get you a lower rate, 80% to pull out cash, and in a scenario that we did recently, we were able to save the customer over $200 a month and also have them skip 2 mortgage payments. So that is my recap of how you do a conventional loan. So if you liked the video, please don't forget to give me a thumbs up. Subscribe down below. Leave comments. I need you guys to leave comments. Let me know what kind of videos you want me to put together. I do them on a daily basis, but I need your feedback. If you'd like to reach out to me, give me a call, 844-775-LOAN, and loan is 5626. So that's 844-775-5626. Go to thefrioteam.com. Frio is F-R-I-O. So thefrioteam.com, or shoot me an email at dfrio@preferredrate.com. God bless. Thanks so much for listening. Thanks for watching. See you tomorrow, same time, same place.